The WPH framework for business ethics. Every day, managers and executives of businesses across the world have to make business decisions that have ethical implications. But how do they evaluate those? How do they identify who those decisions impact? And how do they measure whether it's a good decision or a bad decision? Your textbook introduced the WPH framework for business ethics. This is a practical three-step framework for analyzing ethical reasoning in a business context. The WPH is an acronym for the words that are involved in each of the three-step processes. The first step, the W step, is identifying who the decision would affect. Who are the stakeholders in that decision? In other words, who's going to be forced to bear the brunt or suffer the consequences of that particular decision? It could be the employees, it could be the customers of the business, it could be the suppliers of the business, it could be the residents of the area in which the business operates, or it could be some combination of all of the above. By identifying specifically who the parties are who are involved in and impacted by that decision, it forces the decision maker to consider all of the interests of those respective parties in performing an evaluation of what the best outcome would be. Step two, the P step, is identifying the purpose of that particular decision or transaction. What good is the company trying to obtain? For example, the company could be trying to establish a permanent basis or source of raw materials for its manufacturing facilities. It could be attempting to implement a fair and reasonable wage structure for its employees, or it could be attempting to identify a responsible way to dispose of hazardous waste at its facilities. Again, by identifying the purpose of the decision maker is forced to identify and consider and evaluate what is trying to be achieved in the particular transaction and to measure that against the consequences of the transaction or the effects of the transaction on the decision makers and the stakeholders. In the final step, the H step, we identify how we make the decision. We've identified who it's affected, we've identified what the purpose is, but what's the framework that we use to guide our decision, to determine whether or not those outcomes are good or bad. And there's a number of different models or approaches that could be used. For example, one your textbook mentions is the golden rule. We like to treat others the way that we would like to be treated. If we were the who that was going to be forced to suffer the consequences of that decision, would we appreciate it? Would we think it was a good outcome? If that's the case, it probably leans toward a conclusion that it is the economically proper and also the ethical conclusion. On the other hand, if we don't think we'd appreciate that kind of outcome, probably indicates it's more likely unethical. Another test that could be used is the universalization test. If every single person in our industry acted exactly the same way, would we like the kind of general environment that created, or would we disapprove of it? Again, if it would produce a favorable outcome across the industry and the societies in which our companies serve, it's probably an ethical decision. If it produces an undesirable outcome, it's probably not. And the last one takes into account what the public perspective might be of our particular conduct. It may be that the public may not be aware of our decision. For example, if the issue was how to dispose of certain types of toxic chemicals, how we do that may not be readily known by the public at large. If that suddenly became public, would the public approve of the way that we'd done the business, or would they disapprove? Again, if they reacted with approval, we've probably engaged in an ethical outcome. If not, we probably haven't. There are many other standards to use, and many companies utilize combinations of these. The ultimate outcome, however, though, is to try to reach an ethical conclusion in business decisions.